What up, fam? Shout out to the people in the chat. Uh, it's a wild one, man. Markets are just catching peeps off guard, um, and that's what you want ultimately. And it's just weird because when you look at just I don't know, just when you look at the overall landscape, a lot of things should be obvious, but they're just not to some people for one reason or another. And people just, what's the best way to put it? Just spend a lot of time lying to themselves for one reason or another. Um, and at the end of the day, that's self delusion. You're not living in reality. You're living in a state that is not real. You're living in an alternate world, a parallel reality that only you exist in, and that's the problem. If it's just you, you're running into issues because nobody else is on your kind of time. So, this is what we see today when we look at what they used to call the useful idiots, right? If you're a student of history and you know how this is going to pan out, all the gay people, the trans, the supporters of all of these agendas, right? They're the first ones to go. Same thing happened when Bolsheviks took over. Same thing happened in Cuba. It's just how it works. Who's the most famous uh, useful idiot? Che Guevara. That's why so many people be wearing that dude's shirt and they don't even know why. But that's exactly what that is. As soon as Fidel got no more use for the dude, he just popped him, right? And that's how it's gonna pan out for all the commies. Um, and it's not to get political. It's just that happens even from a market perspective, right? And you don't want to find yourself being a person buying the meme coins. I mean, that's the same thing, right? Acting like it's gonna go to whatever and stay there. A meme coin is never gonna be Bitcoin or ETH, right? And it's important to be aware of that. Some people like to live in la la land, and that is not advisable because that has a cap, right? Meaning it's not gonna last forever. So if it's not gonna last forever, why would you want to deal with it? I don't know. But there is a lot of people that are in that camp. Um, they like to live in la la land. They like to be the useful idiots, as it were. And hey, man, more power to those that think they're doing better without looking at the end results and just ignoring, reality. Um, when you do that in markets, your pocket reflects that. But you got to have the right timeline, the right vantage point. If you're playing a meme coin for a quick pump and dump, then you understand what's going on. That's fine, right? No problems there. But if you're treating a meme coin like it's a fucking blue chip, S&P 500 stock, like you got problems. You got some serious problems. And that line could be transplanted across so many different facets of what we do in our lives, right? Why do we accept mediocrity? We all accept it, you know. Some of us more unwillingly than others, such as myself. Uh, but it's a societal thing. Being crappy and not being good at your job is okay. Being subpar is okay. That's applauded. Think about it. This country used to be number one in all types of shit. Now it's just like any other third world country that's had a brain drain. That's literally what America has become. Any other country that has a brain drain happened to it. It's like any country in Africa. Pick one. Don't matter. Same exact thing. I mean, this is how we get to a point where people think it makes sense to debate bathroom usage. Like, this is what we're seeing in 2024. Not flying cars, not less traffic, more traffic. It's just all those types of things. They are real. They are not made up. They really exist today. And people call this an advanced society. I call them LOL. Because clearly you're fucking retarded if you think this is an advanced society. Pretty simple, right? I mean, let's be honest. There's nothing advanced about how we live. There's nothing advanced about how our markets even function. I mean, it took me all of probably 2 solid years to come to the conclusion of how things were going to end. And I was right without knowing the whole story. That's how problematic and I want to say sophisticated the problem is, but it's really not sophisticated. It's just cloaked in so many different ways that it seems like it's sophisticated because I didn't realize I wasn't done. Right? I kept learning more and more. And that's how I ended up uncovering so many other truths that are hidden in the numbers. That's just how it works. These things, you find the truth in the data, and the data is in your face. They're not hiding it. Nope. They have no interest in hiding anything from the people. In fact, they don't. They throw it in your face. And that's what's interesting about everything, right? Markets are manipulated. Everybody knows. Nobody cares. Nobody revolts. Everybody just accepts it. And then people wonder why things are how they are. Now, you got to understand, non compliance is simple, it's just not engaging. But people opt to get fucked. That's called manufactured consent. And I don't know why people opt for that, but that's what they opt for. No questions asked. Uh, I do not know why people are so quick to cower to other people that literally are no different than them. But that's what they do. It's like high school never ended, for a lot of people because you know if they think you're like a cool kid or whatever it is, these weirdos, fucking think in their heads, they won't. They literally will not debate you or check you or just anything a damn sensible adult would do. And it's crazy because how are we supposed to be moving forward without conversation? And nobody's willing to have a conversation. People just want to say what they think is right, and that's what's right. And fuck you. And I mean, hey, I wish it was that simple too, man. But it's just not. It's not. So, now we're staring down the barrel of a shotgun where they're literally trying to force a segment of the population into kowtowing politically to one individual out of nowhere that's never done anything for them. And on top of that, has destroyed the fabric of their society single handedly as her sole mission. And all you need to do is look at this person's record, and it's obvious. It's not like it's a secret. So it's interesting as things are shaping up, given that realistically speaking, about 90% of the country, if not more, is anti the person that's part of the group that cheats, right? And cheats in the sense that it's their turn, right? I don't really care about either political party. Um, so let's get that straight. However, the political parties are what people believe in. So if the mass population believes in tooth fairies, yet and still, what can we realistically do about it? I mean, this is the problem, right? We allow a group of people to exist as adults, pretending that they understand a system that they clearly do not understand. So part and parcel, it's a societal problem because A, we're not allowed to have the conversation, and B, because I think, in my opinion, because we're not allowed to have the conversation, people aren't willing to check others anymore. I mean, a loss of, freedom of political speech is non-existent in this country, right? You got to be brash, abrasive motherfucker to say what you want. Otherwise, people will not expect you to say anything. They'll just say whatever is the fucking accepted narrative. That's the reality of the situation, right? And obviously, that's whack because nobody wins in that scenario. But unfortunately for us, the only people that know that are the people that are not in charge. So, how can you have a conversation, a civil conversation with a group of people that have no interest in conversing? They just want their way. And I've been really studying this problem of left versus right because I really don't pay attention to it, but I've been studying it very, very closely lately. And this is what I'm seeing. You have one group of people. Well, let me finish. You got one group of people that that are clearly psychos. They believe whatever lies they're sold. Then you got another group of people that are just misinformed to a degree where they believe a party is doing whatever is just for them, when in reality that's not the case. And then on top of that, I mean, on top of that, you have people accepting things that are unacceptable. This is where society is at literally right now. So what is the next evolution? I mean, can there be evolution when there is no symbiosis between all elements? And the answer to that is no. If you think there can be, you're a fucking moron. Not possible, hombre. Because all that exists within those organisms orbit is literally fiction. Excuse me, friction. So how can something like that ever materialize? It's literally impossible. And that is critical to understand as we move forward, because there's a whole segment of the population that literally has no vested interest in anything except policy. And the people that have no interest in policy are the problem. But they're the minority, and it seems like they're the majority. And they're not the majority, they're the minority, extreme minority at that. And, this is really critical to understand. Super critical to understand. Because this is the definition of, what divides a society. And the thing about it is that there's no real divide here. You got people that are informed but aren't speaking up yet. And then you got people that are completely misinformed and are loud as all hell. That doesn't translate over into markets, luckily. Um, so you have to realize that the mental framework you use for life carries over into the markets. This is why they say you have to pick a strategy that fits your personality, right? Not just whatever you think is the highest paying one or whatever, the most profitable one, right? That's not what works. It's picking something that fits you. So if you're a gullible individual that believes a shitcoin shiller, well, your portfolio will reflect that. If you're not making the right moves. If you are making the right moves, then nothing for you to fear, right? You're getting in and out as you're supposed to be. Because the only people that typically don't make it, assuming it's not a rug pull, right, and you make it out to the other side, the people that don't make it are those that overstay their welcome every time, never fails. So, do yourself the favor and don't play yourself if you're out there playing those games. Because people love to play those games. And, yeah, you're going to get burned here and there, and that's okay. Just take your licks, and keep it moving. Because there's not a lot you can do besides that, right? You just come back and save your little money and come back and play for another day if that's what it ends up being. But it's not hard to do good if you're not lying to yourself in the market. And that is something that people just cannot wrap their head around. It takes them a long time to realize that. Uh, and if you're a person with no integrity, basically, you're going to have a hard time in the markets, believe it or not. Um, as crazy as that sounds, yeah, it's true. Because if you're liable to believe that you're seeing something on a chart that's not there, well, then you're going to play that thing that which is not there, and you're going to lose money, plain and simple. So there is no escaping reality, especially if you're trying to make money. And that is something that I've tried to relay, time and time again, but people they don't want to hear that. They just want to hear what they want to hear. And, markets don't care about that. And this is why so many people end up finding themselves in crappy situations with respect to the market. Nobody wants to ever lose money. I'm not sure why people don't understand that. Nobody ever wants to lose money. So, because nobody ever wants to lose money, you should always exercise caution in the sense that you want to always be measuring your risk. You don't always want to be pretending that there is no risk, because this is what people like to do. And, that just does not work. Doesn't work. And that's something that, while we're sitting here talking about markets, it's important to realize that it's all related. Because, think about it, guys. How do we go from, S&P? Well, let me show a chart. Because I really want to drive home this point I'm trying to share tonight. How do we go from Nasdaq 17,000 or not 7,000 or something like that? Some crazy number. Let me 34 days per candle. Why is this changing down here? What is this? Hold on, guys. Uh, all right, give me a second, guys. I'm just dealing with something on my other chart. There we go. Trading view just acting stupid. Okay. So we're looking at the NASDAQ E-mini futures contract, and what we're looking at is the entirety of the active contracts. And if you will look at the 2008 9 low, interestingly enough, for the NASDAQ, hold on, guys, let me get this out of here. Yeah. For the NASDAQ, See, the S&P made its actual low in March 2009, but I never realized the Nasdaq made its low in October 2008 because I just never really looked at the Nasdaq until recently. So the Nasdaq has gone from 1,017.75, which is the low for the week of, or what am I, 34-day period of October 13th, 2008. So sometime after October 13th, 2008, and November 28th, 2008, the market made its low. The S&P, however, made its low in March, and it's probably going to be highlighted on this February 2009. Yeah. So February 2009, 20 February 2009 through April 9th. So if we go look at the E-mini S&P, we're going to see that this period right here, February 20th through April, is the low. So that's the distinct difference between one market and the other. Now, I'm going to highlight the susceptibility of human beings when it comes to markets because this is something that, if you understand, you have a major advantage with respect to playing the bigger picture, right? Because ultimately, the goal is for you to get to a point in life where you understand that all you got to do is buy that one dip and never sell. Because that's an easy way to make, 2000x, 20x or whatever. And you got to realize in the stock market, it's a little different. It's not like in a crypto because the airdrops in the stock market are uh, uh, splits, stock splits, when they take 100 shares and make it 1,000, shit like that, because that just makes the market richer. It's the opposite of what you would expect in crypto. And that's the susceptibility of humans entering markets. They're not good at math. Naturally not. Because based on the hard money theory that Bitcoiners swear by, that's the future of money and all of that good stuff. The reality is starkly different once you let human psychology into the fray. And the fact of the matter is that in our society, I just broke down how people think and function. Think about that. Hold the fucking phone. Hold on. Holy crap. So, all right. Every day I look at the volatility readings for specific markets. For the Nasdaq and the S&P, they're double the average for tomorrow. So I don't really know what that's tied to. Um, yeah, all the times I've been taking reading for the S&P, and I've taken 49. I've recorded 49 instances. The average is 17.3% out of 49 recordings, and tomorrow is 22%, which is pretty frothy. But as we'll see, when we look at the VIX chart later on, this is a high volatility period in time. We talked about that a little bit last time. We'll touch on that a little bit again. The Nasdaq, however, is outsized. The volatility reading is outsized because the average that I have is 23.3%. However, tomorrow's reading is double at 44%. So, not exactly 44 or 46, excuse me, but, right about there at 44. So you'll see that the market kind of closed around the third level, and it touched it relatively early in the session. compared to the rest of the price action that we got for the rest of the day. So these charts are showing you, like, this is 4 in the morning right here, right? So how volatile was today? Today was so volatile that 97% of the price action happened after 4 in the morning, 4:30 in the morning, right? So if you look at where this cross hair is on this chart, if you look to the left of that crosshair, that's the beginning of the session yesterday. So that's how little price action there was until 4:30 in the morning, when the market magically woke up, ran into the settlement area, and I'll zoom in a little bit. Let me get to another chart. So here's a smaller version of what took place. You had the market essentially trade up into yesterday's high, not be able to surpass it, come below the settlement price, treat it as resistance, and never look back. And this was at the open at 9:30. So this happened. The little scenario I just described happened between the hours of 4:40, 4:34, and 9:33, 9:30. So in 5 hours, the pace of everything for the day changed. Whereas before the beginning of that 5 hour period, nothing really happened. The market just hit yesterday's settlement, traded up until yesterday's high, and that was all she wrote. All she wrote. And let's keep in mind when we're looking at this chart that all of these points are below uh, that 6815 area that the market kept defending. Right? We talked about this area for a few days. When we come back out here, that line that you can't really see, let me zoom in. That's what this line is. And if we zoom in on this candle, what's the high? 691. Approximately 10 points above that level, which is spot on for how the NASDAQ moves. And then we get a gap down to open today's session. Now, I just got to tell you guys, yesterday I was on the fence with regards to where we could possibly go. But after today, I'm for sure certain this was a initial thrust lower. We're now about to see a major move lower, i.e., volatility should be picking up. This should break the mid range here soon, probably within the week, if not sooner. But we're definitely going to go right back, all the way back. We're going to just see the market collapse, and we're going to breach these lows, and we're going to breach these moving averages, because you just don't gap down like that. You just don't gap down like that. Anytime I've seen that in the market, and note, there's a difference between an impulsive move downward like this and just a regular ass open, right? Like, let's zoom in here really quick just to highlight what's going on. All right. So if you look at this candle here for the 23rd of July, 2024, you see there's a little gap between this candle and the next one. Right? That was a pretty bearish move. And look at how that day turned out. Pretty nasty, right? Was a 3.5% down day, minus 700 plus points. And the gap down was only 925, 925, 80, 83. So 40-point gap down, approximately. Today's gap down You got 415 to 217. So almost 200 points, a 5x difference. So that's part of the reason why volatility readings are so high for tomorrow's trade, right? So let's take a look at the point I was trying to make so I can wrap that up and keep it moving. Whoops, wrong 55. There we go. So people thought, you know, it was cheap to buy there, and it was cheap to buy there. Yeah, for sure. That was a sensible buying point. But what do you say to people buying up here or up here, right? What do you say to these people? Because these people live under the guise that the market can never go down. But we are just seeing the start of a major down move right now. And here's the thing, we now have to take a look, a close look at what's going to be. Where the hell are my? There we go. That 17,700 level, that yellow line, right? Note we're on a 34-day per candle chart. So when we break it down to the daily and we look at that 1770 area, long-term moving average is there. So this 9 period long-term moving average that you're looking at, the first one, right? I'm going to show you guys it's number 9. Where are you? That's the number 9, all right? So when we zoom all the way out to 34 days per candle, which is approximately 7 weeks per trading, 7 weeks of trading sessions per candle, because that's almost 35 days, right? We go in and we look at that one candle, and what do we see? It bounced off that level, that 9 EMA on the 34-day. All right, if we go out to the 55, is that even close? It was kind of close. And that's how the moving average game works. You know, moving averages are like a weight. So if the market gets close enough, it'll react. And that's basically what you're seeing, or what you're seeing on the charts. All right. It went through the 21-day and tried to blast through the 34-day, but it couldn't even get close to the 55-day. Right? And that's how you weight it. Right? So now we know if the market starts going back down that way again, you know, not so sure it's going to hold up. Typically, when levels get tested like that, they don't hold. Right? Look at this here. How many times did that level get tested? I mean, tons of times. Right? May 2022 through January, basically. Nothing but opportunities to buy if you were buying around this area. Right? Anything after that, no bueno. Right? You're just taking on risk every time. So things just got spicy. And I'm guessing that the Nvidia earnings were not what people were hoping for. I don't know. I don't follow it, but I know that that's exactly, yep, that's exactly what was the driver for today's expectations in the market. And it seems like the market got a heads up way early because NASDAQ was selling off since 4:30 this morning. And what ended up happening at the end of the day? Crush City, 7% off after hours, not up. I mean, imagine all the people that were banking on a positive result, and I guess they didn't get it. Let's see. 68 cents reported. only a 5.5% or 5.25% beat, and only 4.5% on revenue. So they beat both bottom and top line. Uh, I wonder what caused the sell off. I guess maybe the street expected something different and they just didn't get that. Or maybe we just really are done flying high and that's the end. Sometimes good things end on a good note. So we will see. Let's see here. Just give me a second as I look at the financials. Just try to see if there's anything that stands out. Um, just as far as anything that could spook the market. Um, and I'm only looking at certain areas because only certain areas really impact financials in an obvious way, such that I don't have to sit here and, pull out Excel and start calculating shit. So, uh, okay, that's not positive. Really? So, changes in accounts receivable for whatever reason is super duper high. I don't really understand. Is this really a payable? Like, why is this super negative like that? So this is something I would have to go into the financials and try to get an understanding of. But let's see if we get a little. Yeah, the forecast. Okay. I'm guessing that receivable has something to do with that forecast. Nvidia loses 200 billion in market value. Other AI-related companies such as Broadcom, AMD, Microsoft, and Amazon also lose ground. Investors' high expectations led to disappointment despite Nvidia's strong earnings. So it was just exactly as I suspected. Everybody was just too damn hype about the scenario. So the only thing you can do is go the other way. And it seems like the market picked that up early on today because that's what we saw. Right, when we look at this chart and we break it down hourly, right, we go back to the last 8 hours of the day. That's what we see: straight sell off. Right, so market tone is bearish as of now. When you go out to multiple time frames, this is what you see. In fact, we've held 21,000 level. Right, let's just break these things down a little simply. 21,000 level is a major put wall, right? It's a resistance area with respect to derivatives. Let's break the chart down further. You had initial resistance here. You had a gap here, an impulse sell gap, which is something we also have here, right? Question is, how will it play out? Because we're just starting this move, and things are still somewhat on an uptrend, right? When you look at the bigger picture, but momentum has really collapsed, right? And it's the same thing when you're looking at the S&P. Same thing. So if whatever I'm saying for the S&P also applies, or I'm sorry, whatever I'm saying for the Nasdaq also applies to the S&P, because excuse me, you're going to see also similar gap down, right? Similar move downward, and these are just never bullish for the market. Not when it's electronic, not when it's this. So, we're going to see some type of downward move. Question is, how serious is it going to be? I don't know. Let's see what the bonds are saying. Bonds are still up here floating. People were trying to call. I mean, look at this volume. Cumulative delta is essentially collapsing, which is interesting. right? Because price is not speaking to that. Um, so it'd be interesting to see if we're just flagging till we run into this moving average or close to it, to then just pop up, continue pop up, continue the trend higher. Because there's really no reason for the market to roll over. Everybody's short, literally. So this is just an interesting market at this point in time because expectations are different than reality. And that's basically what trading is about. You want to have an expectation of reality. Oh, I'm sorry. I didn't realize I didn't have the watermark on. Let me turn the watermark on. But right now we're looking at 30-year bonds, 30-year bond futures. Sorry about that. Actually, let me see something. Uh, I'm not gonna find this thing. Uh, yeah, I'm not gonna find this thing. All right. Anyway, these are 30-year bond futures. And this market is essentially loaded short. So the expectation of it rolling over, I think, is a little short-sighted because the market has been going down for 4 years straight. So I think it's time for the market to reverse course, given the fact that, and I've been talking about this for months, given the fact that, sorry, wrong set of tickers, given the fact that the Fed is approximately 6 cuts behind the market. And this is just a spread between the Fed funds rate, which is currently at 5.25, 5.33%, and the 2 year yield. Excuse me, where is it? Here we go. At 3.867, which is below 4%. Um, and the thing about it is, think about it. Why would money overnight be riskier than money 2 years out? Because a higher rate implies greater risk. Doesn't make any sense, right? But yet this is what we're seeing. And it turns out that actually, let me really, Jesus, dude. Let's see if this thing works. All right, good enough. All right, so I've put an indicator on here that highlights recessions. Um, what I want to show is what you can expect typically when this starts reversing. We're not at that point where this can even begin to reverse yet. And as it shows on the chart, with 34 days per candle, but let's reduce that by a third per candle. It still looks weak. It still looks heavy. It still looks like it has more downside. I don't know what's gonna happen. Right, this is the Rona reset right here. Um, but every time we come out of these inversions, we get a recession. That's what this means. So theoretically speaking, we never want this to start going up. But again, out of our control, we don't get to determine anything because we chose to stop participating a while ago. So Until that changes, we don't really have a seat at the table, and that's just the nature of the beast. The hell? Hold on, guys. I think I'm hearing stuff. Guess I was. All right. Anyways, bonds still look bullish to me, but they're pretty lofty up here. My guess is that again, market is probably going to continue flagging. This will probably bottom out at some point on a daily basis. Looks like it might be bottoming out now as I zoom in terms of time. Um, as you see, it's flattening out here and bottomed right a couple times. So that's what's up with bonds. Let's take a look at crude and gold. And since we skipped the news, we'll wrap it up with the news. Um, Here's gold. Gold is still just floating. It's just up here. Momentum is just up there. In my opinion, this is just floating until it catches up with itself in terms of weighting. The moving averages catch up with it. Maybe we're going to move like this and then another pop higher. That's just how bull markets move. And when you look out in time, this is what you see, right? So we could just be getting that right now. Crude oil has been weak. It looks like it finally found a bottom, and we'll look closer at the markets. We're just starting out, zooming out, right? We're starting out with the daily point of view, and then we'll zoom in. But it was weak for the past couple of days, given that you know the weights are above it, moving averages are above it, the long-term moving averages. So you have to be cognizant of that. The market showed itself, right? Here we got bonds. Bonds today just stayed trading around the settlement. Typically, when markets do that, they're setting up for some type of move. And the more times it does it, a market, whichever market it is, the bigger the impending move because that's just consolidation. And if you look at the moving averages, they're essentially quasi flat because they're not really going up and they're not really going down. They're just up and down, right? And we're looking at a week's worth of data right here. A week to 8, 9 days of data, of trading data, and we're just looking at sideways chop, right? And when we're looking at this profile here, it's pretty balanced, relatively speaking, with more activity on the lower end. We can even see the point of control being down here, 124.08. So the market it's consolidating, and it seems like buyers are supporting the market at the 124, 123 and a half area. So that's what it looks like in bonds when you look up real close. Let's take a look at the E-mini. And let me. Oh, this ain't the one. 55.34. All right. All right. So we're looking at a pair of charts. The one on the left is showing 13 ticks per candle. One on the right is showing 21 ticks per candle. As you can see, trend is clearly down. And the market is not being shy about that. And here is the gap. That mustard stain you're looking at right here on the left chart between 5,591. Let me see something. Yeah, between 5,591 and 5,587. Market tried to close that gap and it just got smoked. And it hasn't been able to pick itself up since. And so much so that we've already hit our first target without even getting close to settlement. So now there's a huge settlement gap between this high and that settlement. And if markets really are going to be volatile, we could easily see the market go right there and then collapse further. Like these are the things that people just can't wrap their mind around the market doing within one day. But if there's enough fear in the market, it can definitely happen. Let's take a look at crude. Right. So to me, it looks like crude has found some type of bottom over here, at least for now. Ultimately, it has to get above the settlement for today's price action, find some support, and continue to sustain itself upward. Let me open this bad boy up. So you see you got the bottom at 71 and a half over here. You got point of control very, very close down here, but you have essentially what's resistance over here. And that is 73 and a half, 73.6 to 73.5. All right, and what is this bottom here? I think it's 73.80. And the market keeps finding higher lows. All right, so that's what you want to see. Now, if the market breaks this area here, let me zoom in a little further. Jesus. If the market breaks this area here, let me just move this a little to the left. All right. Market breaks this low right here. I'm sorry. This low right here, where it previously held, most recent bottom, most recent low, 74 and a quarter. If crude breaks 74 and a quarter in a meaningful way, and it doesn't hold 74s, then probably going to continue to trend lower. But if it doesn't, and it is able to hold that level and trade higher, well, that's just, it's going to keep doing its thing. And the thing about it is when a market is in this range bound type of trading, you never really know when a new range is going to be set. You don't know when it's going to end, but you have to be cognizant of all the structural changes in the market, right? That's why you got to watch these little things. Now, if we zoom in to 7 ticks per handle, to the market is trying to get up and over, but it has resistance above. And that's going to make it an interesting market to watch because it ultimately has to get above 74.80 in order to sustain any bullish momentum. So this is really just step one. The ultimate goal is to get above 74.80 to establish its upward trend and keep going higher. All right, let's move on to another market here. We've talked about equities. Let's talk about gold. And then we'll move on to news and wrap it up. This one went a little longer than I wanted to, but that's all right. Um, it's important that people understand that they have to have a sense of reality when they're playing these markets. That's pretty much what the initial half hour was about. Helping people understand the mental framework they need to have in order to play this game successfully, because it's very, very daunting to think you have a handle on things that you don't have a handle on. Now, looking at gold, it basically traded around its first level and under a settlement today. So it looks kind of weak. It looks like it might be ready to transition lower, but it's currently trading above its settlement. So we'll want to see what it does around the first level. If it trades above it, then maybe it's going to recapture bullish momentum. But if it just stays below it and it just keeps chopping sideways, well, it's just going to stay floating, right? I mean, that's essentially what it's doing. It's just consolidating up here, right? And when you get rid of all the candles and stuff, like just look at that profile on the right. You know, the most obvious thing is this gap here. See this gap right below that little hill? All right, so this little hill here and this gap from like 25.25 and below, right? That is a critical area, critical level. So if the market gives that up, we know we're in dire straits. Right now, currently 2025.40. So presently doing all right, but again, it's just about the market maintaining a bullish structure. 2025 is a level when it comes to gold. So that's pretty much what you got going on with the main markets. VIX is an interesting thing because for one point in time, we're expecting it to continue to go downward, 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 and look, it just stops entirely, right? And it just recoils higher. And this is the thing that's unique about the VIX, right? We try to understand it and stuff like that. And we talked about a while back how this could be an area of support if it played out in a technical fashion, and it ended up playing out that way. Um, and we're seeing the result of that, right? So once we zoom in, let's see what we have now. What we have seems to be a potential area of resistance, but the market found some significant support here. So this is an area where the market is potentially going to pivot, and whatever options players decide to do is going to determine the fate of whatever happens with the market. And if the volatility readings are any indication of what tomorrow's going to look like, Chop City is definitely big ranges is afoot, and that's the important thing to understand for tomorrow's price action. All right, let's see. Actually, nope. Let's see what we're working with here today. Yeah, everybody's catching on to the fact that these people are just now trying to copy all the policies that they negated for the past, however long. So it's funny to watch the normies just laughing at these people. Gold corrects back to just above 2,500 as USD recovers. We didn't even look at the dollar. Silly me. Must always look at the dollar. And look at that. Bottomed out. So let's presume that this market is, in fact, finding a bottom. Because if you look at this, I was just talking about how markets bottom. This is significantly similar to what we were just looking at. So let's zoom out 5 days per candle, see what it looks like. So we're right on the moving average, right? We're right where previous support was established, and we're right where market found a bottom and then recoiled to set that support up again, right? So in line with that, you also seem to have some volume support playing out here, meaning that the market might, this is sounding really dumb to me, but see if the market pauses here based on whatever it did here. Because again, the idea is that if buyers are here to support and buyers are going to enter now to support, well, then it'll be reflected here as well, right? In all these momentum categories, volume, volatility, Volatility has apparently run its course, is already maxed out. That's why it's curled up. Right when we zoom in, the max was 92 verse out of 100, so it didn't even make it to 100%. So now we just gotta watch and see if volatility recoils back to normal, to its normal state, which will be back up here. But it'll take some time. But if this is the case, and this does start to impact equity markets, you can bet your bottom dollar volatility is going to continue going up, and equity prices are going to continue going down. And in line with that, interest rates will also go down, which will just put the Fed further behind, which could move that spread to 2% quicker than expected. So, yeah. Treasury Department aggressively pushes down long-term interest rates via shift to T-bill issuance and bond buybacks. So what does this mean? What this means and why it's important is the following reason. Or let me give you the following definition. What this means is that the Treasury Department, which is a subsegment of not the U.S. government, um, is trying to issue short-term debt, which is easier to pay off than long-term debt because the market prefers to treat T-bills as cash. So if T-bills, which I think the shortest duration is like 7 days or something like that, or maybe it's like an overnight cash management bill. I can't even remember. The point is, let's presume 7 days is the shortest duration. If the government can borrow money at 5.33% on an annual basis every 7 days, they're never paying 5.33%. They're only paying that little bit for those 7 days. So it doesn't actually cost them much of anything to borrow trillions for 7 days. So in their minds, they can take that short-term cash, cycle it out into the back end of the curve, treasury bonds, bond buyback. I mean, the market's already set up to be bullish, so that wouldn't even be surprising. A lot of us were expecting this a long time ago, just had to play out. And here we are. Because the reality is that the Fed has created a situation where they have to eat it. And by it, I mean the economy. Because there is no more jobs, there is no more anything. So if you are not self sustaining and you're dependent on an economic daddy, essentially, you got to realize that the Treasury, the Fed, all these economic government sponsored entities have done their damnedest to ensure that the economic structure of the U.S. has been disheveled. It's not as strong as it once was. You have a lot of jobs sent overseas, etc., stuff like that. So, when you look at Europe, same deal, right? I mean, they're offshoring everything everywhere. It doesn't matter where in the West you look, it's all the same. So, you know, it's just funny. So look at this. Shall not be infringed. Massachusetts Supreme Court strikes down switchblade knife ban. Trying to go the way of the UK is Massachusetts, which is not surprising because, as we all know, the US is not really the US, right? So it's ridiculous. It's ridiculous. People, they don't want you defending yourself. So these are things to be aware of. They don't want people to have any type of self autonomy, which is why you have to get involved. You have to know what's going on, and you have to care about yourself, basically. If you don't, you're pretty much fucked. Biden Harris admin busted using secret rule to Trump proof DOJ. All these people do is get caught doing illegal shit, and nothing ever happens. It's funny, and then people think there's like an actual system where there's fairness and impartiality. It's pretty cute. All right, let's keep on reading here. New funding round talks indicate OpenAI worth north of 100 billion. Not sure why, but cool. Attorneys General of 24 states asked Supreme Court to block EPA's methane reduction rule. Now, this ties back to the Chevron deference rule being revoked. These middleman agencies such as the EPA, SEC, USDA, FDA, CDC, you name a three-letter agency, that's what we're talking about. All they've done is destroy American infrastructure, left and right. And then on top of that, the interesting thing about that Chevron deference legislation was that it was meant to give the experts reign over the issues. And what happened? Well, the opposite. There was never any accountability and nothing good ever came of that. So that's kind of part and parcel what we're seeing as a function of this. That's why these attorney generals out of 24 states feel they can go ahead and ask the Supreme Court to block whatever these people are doing, the EPA. Nvidia dumps and pumps after smashing Q2 expectations, but guidance is a mixed bag. So there it is in short, folks. All good, but too good, and the future doesn't look as good, which is why people are dumping. All right, let's keep checking out these headlines before we wrap it up. 2,000 workers gone. Klarna is first major company to unleash mass layoffs thanks to AI. It's coming, guys. Hope you're ready. Unwind of China's great carry trade could unleash 20 billion in monthly FX sales. Now, as I've explained numerous times before, the world is a flow chart for capital, which is why it's crucial that you understand how money flows and why. And the first thing to know is that corporate flows are corporate flows. You can count on them to happen in a scheduled fashion. What you can't count on them is to move the markets forever. Right? Like if they'll cause a 30, 50 pip move, that's all it's gonna do. And that's if you're lucky, right? Um, Everything else is just pure volatility play. And that's important to understand. And that's why it's critical to understand who the players are in the system, because you don't know how this could lead to equities getting sold in the US. Like, you don't know if you're not thinking about it, right? So, dollar weakness equals exporter FX sales. Now, why would that be? Well, let's think about it. What is the US dollar's sole function outside of the United States? That is to facilitate trade. That's why it's considered a reserve currency. That's the point behind that. So if dollar weakness, now main thing to understand about the US currency are the main holders of said currency. It's not the people. It's foreign institutions and the Federal Reserve. And I'll have data for you next time because I just know it, but I should have the data to show you. And again, this is their data, right? And if their data is showing that, thank you, sir. Please, good sir, parlay for far away. Hit the like and subscribe, people. If you like this information, please hit the like and subscribe. Share it out there with the homies. Put them up on game. But we just sat through the dollar getting decimated for pretty much all this period. So the past 4 months or so. So not only that, right, but we have to deal with all of the inflationary pressures that come from these sales. Now, let me explain something to folks. When a dollar is created, it typically does not stay here because, as I stated earlier, the majority of dollars in existence are held offshore, whether it's by a foreign entity or Federal Reserve or some other supranational institution, right? Like ECB, Chinese banks, just other institutions that deal with financial transactions, right? Major corporate brands, Samsung, Pepsi, Coca-Cola, right? So if these entities are selling these the dollar, let me see what this is talking about here. Excuse me, guys. Sorry about that. Okay, so here's an interesting chart. Chinese good traders' FX conversion rates. So changed since 1 month before start of U.S. dollar weakness, which we just saw was April. Um, uh, ah, so they're showing 12 months before, and then what it could be 12 months moving forward. So they're trying to say that this could be the bottom, I guess, because that's what it looks like to me. If they're predicting that that could be it, this is the meeting, the black line. You see. Though a 56 percentage point increase would indeed be large, it would, if realized, still leave the FX conversion rate at a relatively normal peak level of 63%, 80th percentile. This is due to the fact that FX sales by Chinese goods traders has been very low this cycle and stood at just 6% of the trade balance in July and only 9% across Q2, much lower than the 2016 through 2024 average of 43%. Wow. So think about it. You're holding a bank balance, let's say it's a million Chinese yuan, but you're holding that shit in USD. And, let's take a look at Chinese yuan versus the US dollar. Because again, exports are a big driver of that valuation. And, if we look back to April 2024, according to this chart, Chinese didn't start selling until July, until the top of the stock market. How interesting is that? Huh. Regular. What in the hell is this? What? Oh, that's the yen. Okay. Wait, what is this then? What's going on here? Hold on, guys. I don't know what this thing just did. Continue right scale. All right, there we go. So I don't know what the hell is just happened here. All right. Anyway, so what I wanted to show was that Chinese yuan started getting bid, or the dollar started selling off versus the yuan around the same time in mid July when the stock market rolled over. But as it looks right now, it looks like the same thing is about to happen. But it looks like the dollar might be bottoming out here against the yuan. So we'll see how that materializes. Because that's kind of what that article was trying to say. Oh, there was two of them there. That's what happened. All right. So that's kind of what this article was trying to say. But important thing to understand overall is that when foreigners are not incentivized to hold the U.S. dollar, as you guys just saw in this chart, right? I mean, if you're holding a bunch of yuan and it's just going down in value because you're holding that yuan in dollars, you're gonna sell that U.S. dollar and you're gonna buy that yuan. Simple as that. Especially if you got a bunch of it. So all right, let's see. Nope. Not even gonna talk about that. Venezuelan migrant driving force for Amazon hits mother and 4-month-old child. Flees the scene. Cool. Mexico pauses relations with U.S. Canadian embassies amid judicial reform concerns. This is interesting. Well, this isn't the Jew. Where's the Jew? I thought the Jew was the president now. Well, this makes sense because who the hell would want? He would normally not want to deal with these morons. So I get that. That's not even surprising. Please bring signs. Marylanders will protest AI data center power lines as eminent domain threatens small farms. Holy shite. So here we go. If you don't know what eminent domain is, that's essentially when the government can take your land just because it feels like it, based on some made up notion that they like. And we're about to find out exactly here. A power line battle is unfolding across the Mason Dixon, a demac- demarcation line separating Pennsylvania and Maryland, as 10,000 Marylanders in a Facebook group are raising hell about failed green energy policies, and that's green in quotes, by far left Annapolis lawmakers. These policies now lead to the rising probability that eminent domain will be used to seize small farms to construct and expand transmission cables to increase load capacity to power new artificial intelligence data centers. So I don't know if you guys are in the know, but all of a sudden, electric power generation is a hot topic. Kind of makes me wish I would have never left my first career because I'd be a super hot commodity all of a sudden. But the interesting thing is that I wonder if people will catch on to the fact that we've sat with the same decrepit power grid forever, and only now they want to update it to essentially spy on you because that's what it's ultimately all boils down to eradicate any privacy you could ever have. So this is definitely getting interesting, and we'll see if people catch on and point this out. Let's continue reading. Developer Public Service Enterprise Group, or PSEG, is seeking to install 70 miles of new high voltage power lines that zigzag through Baltimore, Carroll, and Frederick counties in a project called the Maryland Piedmont Reliability Project. Gotta love the name. Reliability, just not that you're going to be able to keep your land, quote unquote, your land. The upgraded transmission lines will increase load capacity in the state by importing power from surrounding states such as Pennsylvania to power AI data centers in Frederick. Now, I'm not even going to make the comment. All right, let's see what else is going on here. Wow. PSEG recently spoke with Fox Baltimore about their willingness to work with small farms to reach a mutual agreement on acquiring property rights. However, PSEG is prepared to invoke eminent domain if an agreement cannot be reached. According to a recent note by ESG Legal Solutions, Maryland consumes about 40% more electricity than it generates. The note adds that apocalyptic environmentalism has led to the retirement of fossil fuel power generation and the reliance on increasing power imports from surrounding states. So let me get this straight. Instead of putting some gas in generators, let's completely turn upside down people's lives all in the name of perpetrating a fraud. Cool. Just wanted to make sure I had my facts straight. Quote, solar energy, wind, and biomass are increasing, but will not at any reasonable time replace that capacity or energy density. So the state will import more electricity. ESG Solution says, adding, the state, quote, cannot import its way out of this predicament with ever increasing electricity demand. All right, so I see what's going on here. Uh, so yeah, guys, they're just trying to find a pretext to demonstration at Maryland Data Center Summit Thursday, August 29th from 11 a.m. to 2 p.m. See the location here, 7932 Opossum Town Pike, Frederick, Maryland. If you know about Maryland, you guys know what this is really about. This is definitely not about just AIs for power and all this shit. It's about invading people's privacy. So become aware of what's going on because it's a problem. It's definitely oh. If you still use Binance, you're a fucktard. I don't give a fuck what excuse you got. You're a fucktard. Bug diets, once labeled conspiracy theory by mainstream media, now becomes fact after UK government backs sustainable food. Now, I honestly do not know how long these decrepit politicians out there in the UK think they can continue to hide before people wise up and walk down the right path. So, this is going to be interesting. U.S. warns tanker hit by Houthis could cause largest ship oil spill in history. Cool, man. Tell somebody that gives a fuck. Ford will modify DEI practices and LGBTQ ranking, report says. West Bank explodes overnight with largest IDF raid in decades. Evacuations could be next. Genocide is happening in real time. And nobody cares. WTI extends losses after small and expected crude draw. So yeah, we probably saw a temporary local bottom here. Telegram CEO Pavel Durov charged with, quote, criminal use of app, unquote. Not allowed to leave friends. That shit is just a joke. Seriously. Several states refused to remove RFK Jr.'s names from ballots, hurting Trump. Oh man. I think that's it for today, guys. Supermicro shares plunged 15% after company delays 10K, one day after Hindenburg alleges accounting manipulation. Super microcomputer. What isn't this? Ah, this is one of those AI companies. Yeah. Well, good luck to whoever was playing that. Somebody was definitely trying to get along that thing. I remember that. Yeah, I think that's it. Yep, that's it, folks. That's all she wrote for today. Thank you guys for tuning in. Um, Remember to stay focused. Remember that markets change at the drop of a dime. As I look at the market right now, let's see. I mean, this thing looks like it's really finding a bottom right here. I mean, that's how markets do it historically, where it'll bottom out overnight. So you never had a chance to do anything. I mean, it just looks like that right now. It could easily just run into this level here, fill in that gap, bloop, roll over. Right, but again, like we talked about, volatility readings are high, so this could easily move back to settlement area and then roll over. Um, but we're reaching levels of resistance already in certain time frames or price frames, as I like to think of it. Um, so we'll see what happens, guys. We'll see what happens tomorrow. It's going to be a volatile session. I'm expecting a continuation of the market lower. However, some support right here. The trend is up overall, but the market is looking markedly weak. So we'll see how that shakes out. All right, guys. Peace. Thanks for tuning in.